things really aren't going your way, first it's going to be sacrifice in exchange for getting back on track. But after a certain amount of time, after you're back on track, the real sacrifice is going to be focus in exchange for success. So that's what I want for all of y'all, is commit for the rest of the year to being singularly focused on one chief aim, one goal, one ideal. Not trying to get healthy and in shape and get rich and trying to fix your family and trying to look, you got to find the first thing that's going to lead the domino effect. And most of the time it's health. Okay. So get focused. Focus equals success for the rest of the year. Now, if this is your first stream, welcome. If it's not your first stream, welcome back. Great to see all of you ChartAddicts members. You guys get the drill. I called this out yesterday and I gave up on the trade idea. So I had sent this out yesterday. So we took a buy at the market open, or about an hour after market open yesterday during the live stream, made money. It was phenomenal. Then we had the liquidity grab as expected, but it was deeper than I thought. Price ended up recovering back above the lows. And so I was like, okay, naturally, what you want to see is at least a 50% pullback before the move continues. Now, as the market started to drop and kind of come down here for the double bottom, I realized that, look, I don't know why I was aiming for a 50% correction. It's the same rules, body to wick. I should have waited for the 88.6 and it would have been literally the best entry. So this is the original idea. This is the oh shit moment. And this is really where I should have been stacking entries. And then naturally, after you have that 88.6 correction, now we get that push back up. Okay, so the trade idea in a nutshell was very, very straightforward. We have this daily support level. And I'll have to show you on a different chart just because it's a little bit cleaner here. Okay, so we got this daily support level here. And whenever I'm drawing a zone, you guys get the drill. It's always going to be wick to body, because I really want to incorporate this entire level where buying interest is sitting. What does buying interest mean? It means that whenever the market gets to a zone, if you see price reject, it means that there's institutional buying interest. It's a price where large money and financial interests that have enough money to move markets, they want to buy in at those prices. And we're back at that level now. And so if this is a discount for those big financial actors, then I want to be looking for buys. Even though a lot of people are seeing bearish daily. Let me turn on these captions real quick. Show captions. Now we're live. Even though we're seeing daily momentum being bearish, if we look at structure and we see that the price is attractive enough for buyers to step in, I immediately think that buyers will step in. Buyers just do whatever a smart shopper would do. You walk in a store and you see a TV at a discount for 50% off, you're going to buy it. Even if you think it can go a little bit lower, you're going to start buying. And so that's where my mind's at in terms of that recovery. Mo and I had a conversation, like a back and forth yesterday. And Mo, after you and I had that talk, I kind of just took a step back and tried to think about it from first principles. And I think that you were right what you said yesterday, Mo. If a positive GDP number is directly related to the Fed's higher for longer. So because the economy's strong, Fed's going to have to stay higher for longer, which is going to drag the economy into that inevitable recession, but it's going to make it a lot worse. So the longer that people go without buying a house, the longer that people go without buying a car, the higher that rates continue to get, it's only going to drag the economy lower and lower. So for now, I think that there's still some downside risk, because if everyone thinks that there's a little bit more of this higher for longer scare, if everybody is still kind of in this uncertainty about how that's going to affect future markets, I think that we'll have a sell-off temporarily until the markets get some kind of certainty at the Fed meeting at the end of this month. So from a fundamentals perspective, I can see both sides. I can see the longs and the shorts. And that's why I prefer to go back to my technicals, because if I need a tiebreaker, technicals is going to be that deciding factor for me. So I'm looking at structure. As long as we hold this area of structure here, I do see a recovery and a double bottom and correction back up. All right. So because of the technical price, I'm bullish, but I can see the argument for both sides on the fundamentals. All right. I know that that's not like the solid answer everyone's looking for, but in economics, there are no certainties. Anybody that speaks in certainties when referring to financial markets they're probably just lying, right? The best economists in the world, everybody from Bob Elliott, Ray Dalio, you look at, keep going, Howard Marks, you go to even Buffett. These guys are not trying to predict. They build multiple scenarios. They put a probability to those scenarios. And that's what we're trying to do. So whenever I'm giving my perspective on the economy, which I will be doing throughout the stream, I want you guys to know that I'm not trying to speak from a perspective of certainty. Nobody has a crystal ball. Sometimes it might seem like it because of how accurate my trades are, but rest assured, I do not have a crystal ball. And so, yeah, for those of you guys that are new to economics, that's the first rule. Anyone that says anything in certainty, they're lying. Okay. Gonzalez William. Okay, William Gonzalez back in the house. What up, Roy? Good to see you. Nice to see you too. MMB Fire Flame back in the chats. We have the core team here. Big Romy is in the crib. Two-step. We have Bianca. We have Bobby, Desi, Gabe, my boy Karan. Side story, me and Karan went to high school together. I know I've told you guys this. Went to middle school and high school together. And then eventually saw him in college too. Wild. Okay, so that guy knows a little bit too much about me. Karan, you're a threat. All right, so I'm gonna just say you right now. Okay, we're gonna keep this one between us. And whatever happened back then, that didn't happen. Big Josh is in the house. Linda is here. Max, Linda, always great to have you on. Big Mo, again, that combo yesterday, big eye opener as usual. Noah, appreciate you always for the support. Noah, back in the crit. And then we have Natalie. Natalie, good to see you again. Yeah, Karan, he said, keep him close, buddy. Closer than you think. And I'm fucking tied by the hip. All right. He said, this is a liability. Okay, a few things that we're going to cover today. I want to cover financial market news, and I want to give you guys my overall perspective on where I think the economy is going, as well as the 5 biggest factors that I think are going to have the most impact going into next year's election cycle. Now, first, let's cover the trade real quick, just so everyone's on the same page. The trade idea from yesterday was a simple, we had that consolidation, we had a fake up, fake down, break and retest. Really what I'd like to see during this session is a retest of this range here for a double bottom. So here's how this would look. Delete all this, move that off to the side. We have phase 1 right here. Fake up, fake down. I'd like to see a double bottom and a push. Okay, so I would draw my fib, I'm going to draw my Fibonacci from this recent impulse that I'm trying to measure, which is the body of this candle here, to the high of the previous session, which is London session. And personally, I would like to see 1492, this 88.6 level. So you guys can see it right here. We have a consolidation range. I'd like to see a bit of a fake up first, and then a crash down. And then we can get some kind of buying opportunity from that low. So that is the area that I'm watching. I'm going to show you the previous session, kind of box it off and do the whole 9 here. But just to keep it simple, it's this. And then if you look at a fib from top to bottom, because we also have this bearish impulsive move down, we're going to get an 88.6 move, and this is where we're going to see the correction. So what I'm also going to do is draw my top side fib, because that's where we're going to get those sells. Body to wick. 291. Okay. So we have this zone sitting right above. Oh no. Please don't tell me it reset. Oh, damn it. Bruh. All of my settings for the indicator just reset. Well, that's disheartening. Okay. Okay. Let's go 9:30 to sit. Okay, Frankfurt. Let's go. Damn. That's wildly unfortunate. Damn, that's fucked. All right, we're gonna do this the old-fashioned way. Here's the low. This is where the market closed yesterday. New York session closed. This is our consolidation range. And so, as I was discussing yesterday, retail traders, or let me not call them, we're all retail traders. Let's call it amateur traders love to chase markets. So if the market breaks up, they want to buy it up. And if the market breaks down, they want to sell it down. Now, experienced traders, you guys know we do just about the opposite, which is if the market is above this range, I see it as a premium price. And this is where I'll be looking to short. And I'll be looking to buy below the break of that range. Okay, so even though we have our 88.6 zones, you want to wait for a clear break above this consolidation range here, which is the start of Tokyo to this pre-New York open here, which was, well, this is the New York open right here. Okay, so a break in either direction, we'll be looking to take the trade the opposite way. 10:20 to 11:20 is my range, or sorry, is my kind of session that I'm looking to trade in. 45 minutes, quick in and out, which is going to be in about 20 minutes. So what I'll do in the meantime, as we wait for this trade to set up, is I'll be covering market news and I'll be trying to give you guys my insight, what I believe is happening, and where I think markets are going to go from here. Clearly, there's a lot of geopolitical factors that are dragging down the economy, as well as Federal Reserve decisions, central bank decisions globally. So that's what we'll be looking at. I'm about a few minutes late, but I'm here. Tony J, good to have you on. Bom dia, boss, from Portugal. Edney Tenjua, thank you for hopping on. We got Kenton Brown in the house. We got a full house here. Again, my YouTube people, if you guys are regulars, please always drop a comment just so I see your name. I see your beautiful name show up in the chats, and I at least know who's hopping on regularly. When we do giveaways, when we do all types of raffles and things, I want to make sure that everybody gets their just credits. So besides ChartAddicts members, you guys know we're locked in. Okay, I got my core team here. This is my Avengers. I got my A team right here. I finally got that reference right, by the way. You know, I told you guys what was that movie with Mr. T, and I was trying to figure it out the whole time, and someone said A team. Yeah, I went fucking watching on the plane. A team. All right, that's what we got right here. This is all pretty straightforward, guys. This is all pretty straightforward. This can't get any easier. We had the consolidation, we had the push up, down, and back up, and then today we have a reset. And we just had that little break above. That little violation is everything that we need to show us that the buyers faked up first. We had a break above that London session high. And so it's like, all right, we know the market's going to end up here today. Okay, but it's not going to be a straight line. So what happens is, this is the psychology of the market open, and I want you guys to really pay attention to this. This is very important. If the market direction wants to go bullish, at the market open, you'll start to see bullish momentum forming. You'll start to see candles break out of the previous London highs and start to break that range. Institutional traders have buy stops, which are trades that get entered as soon as you cross a certain zone, sitting right above the London range. So as price pokes its head out, all those buy stops get activated. Now what happens is, then the market comes back for a retest, which is what we were just talking about, a retest back down here. And because of all the traders that were chasing and looking to breakout trade the market, they're piling in orders. They become, well, they all just basically lose their money. And then that becomes the exit liquidity that we need to take a trade down here. This all goes back to the very, 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 very basics of buy low and sell high, find a range, buy the bottom of the range. And so that's what I'm looking for now, is I want to see this short down to 1493. Okay, now this is not going to be a straight line. Again, we still have about 20, 30 minutes for this whole thing to set up. For all we know, this thing could form a floor here, push up one more time, and then come back down. And so the most important thing is do not try and predict the candle by candle market action or try to make decisions based on candle by candle market action. Instead, find the range that you're playing in, i.e. this is the high, this is the low, and then look to buy at discounted prices and sell at premium prices. Everything that's inside of the middle, that neutrality range, you can take your risks, but understand that those are lower probability trades. CA members, put a number in the chat if that makes sense. This should be clear as day for all of you. The rest of you guys watching online, if this does not make sense, we are hosting a workshop. We're hosting a free workshop every Saturday at noon Eastern time. You can go to the website, sign up on the wait list, get on the free webinar every Saturday where I break down the basics of NASDAQ and how it moves. And of course, November 5th to the 8th, we're hosting our next NAS 100 masterclass where I will give you my strategy and allow you all to start practicing with this and to start using it and implementing some of these tools. Thomas says, Shy City, live from David Sanchez, live from Mexico. Let's go, David Sanchez. John Wayne's 45, what's going on? Chasimpa, where's the DXY headed? Wherever it wants to, Chasimpa. Roy, my guy, thanks for all your motivation. Diego, I'm not here to motivate. I'm here to inspire and lead by example, brother, but I appreciate you for the support all day, every day. Marcos Rodriguez, but you're walking on thin ice. You're walking on eggshells, Marcos. You were wilding yesterday. You're about one comment away from the gulag, brother. I'd fucking play it safe today. Roy, when can we meet? You know what? I don't know, man. Get in line. Watch him close the stream after taking an L. We already short. Keep buying, kid. Okay. Quick. Remove unwanted commercial spam. Boom. Get it. NAS 100 masterclass with a bunch of troll emojis. But why are people so miserable? Look, if you hate yourself, I get it, right? But please just go hate yourself somewhere else. Do it in private. Leave me the fuck alone. I love me. All right? I'm in the best season of my life. I need y'all to stop inflicting your own self-hatred onto other people. That shit is selfish. Is there still space in the boot camp? For you, Josh, we'll always make room. Stop fucking around. What kind of question is that? Okay, cool. Josh, we'll see you. Josh, ask about the members. Just hit up our team. Josh, we'll get you taken care of. Joseph Rango says, let's go, Roy. Yep. Broski, we back at it again. William Otto, you already know what the deal is. Marcos said, nah, I got one more strike. Marcos, I make the rules, brother. If I say you're going after one more comment, you're going after one more comment. It's like what Dave Chappelle just said at his recent show. They tried to cancel him at his own show. Someone stood up, got some attitude. Buddy, you fucking leave. Just turn it off, right? This is like the whole cyberbullying shit. Like fucking just turn off the phone. You feel me? You don't like my stream. You guys think I suck. Beautiful. You're entitled to your opinion, right? America's the greatest place on earth. Everybody has a chance to speak their mind, even if it's stupid. That's your prerogative. But just like that, you can also close the channel. Now, let's talk about those 5 things that I believe are going to be the biggest drag. Actually, I've noted 1, 2, 3, 4, 5, 6 major dynamics. And I recommend you guys write these down because most of you are not well-versed enough in fundamental analysis to really be able to piece this all together. I'm going to simplify it as much as possible, but you guys are still going to find a way to let this go over your head. So taking notes is the best way to take away real value. Now, if you're like, well, Roy, I just want the answer to the test. I don't give a shit about the value. That's fine. But just keep in mind, you will always be dependent on someone else for your livelihood. So I want you guys to really understand this stuff yourself. How many assets do you recommend a retail trader focus on? Jacinta, I would say 1. Okay, one of my rules for trading is stick to 1 session, stick to 1 instrument, and stick to 1 model. Why? Because the same players will show up every day in the markets. And if you understand the psychology and the behaviors of the people you're playing against, you have a much bigger advantage at being able to trade with them. So if I understand the personality of one of my friends, when they're hungry, when they walk in the door, when they're angry, when they walk in the door, I'm not going to sit here and crack the same jokes that I would if everything is going fine. If I can genuinely see the pain in their face, I'm like, yo, something's really going on. I'm not going to start busting their balls. You guys understand? And that's why it's important. It's going to be an unspoken rule. You can't wait until the person blows up in your face to be like, oh shit, maybe I shouldn't have made that joke. You have to understand the personality. Same with trading. If you have too many different pairs, you're not going to have a clear, intuitive sense of the behavior of that pair that day. Is it behaving normally? Is it respecting structure? Is it behaving a little bit more erratic than normal? And if the answer is yes, you want to know that the reaction is going to be more severe than what you can expect, what you can normally expect. So really keeping things simple and sticking to one pair allows you to have a much more intimate understanding of that instrument, its behaviors, and the psychology of the players on the other side of the screen. Does that make sense? Now, I'm not saying that you can't trade many different pairs. You definitely can. But from my perspective, I've tried both. And after years of having, let me show you what my watch list used to look like. This was my watch list. I would go through every GBP one by one and just say, I wonder what's happening. Oh, every single pair, there might be a trade. Oh my God. Like, this is exactly what I would do. Oh my God, UCAT is flying. All right, let me see if I can just find a move. All right, let me see. GBP USD. Massive bullish candle in the 1 hour. Maybe I should just take that trade. Right? That's this type of dumb shit I used to do. Oh my God, Euro USD is flying. Right? My pair is so slow today, but Euro USD is flying. So obviously I'm doing something wrong. That used to be my mindset every single morning. Now I have all these other pairs that I watch for you guys because obviously I'm phenomenal at what I do and I want to provide as much value as humanly possible. But really, I only trade USD JPY, Euro USD. Those are kind of like swing trades. I'll probably take a trade once a month, once every 2 months when the market is gearing up for a massive swing trade, which I kind of feel like I missed this one. And then NASDAQ is what I daily trade, meaning that I show up every single day at the market open. I don't trade every day, but I show up every day. And I just look to be in and out between that 45-minute session that I've predetermined for myself. It's that simple. Now, I do want to give a slight piece of advice before I go into the fundamental breakdown, which is Fridays are typically the most erratic market movements, meaning the job of markets is to present a lot of things that look like opportunity and to entice retail traders to jump in and then try to take back all the money that you've made during the week. So I want to give you guys a massive piece of advice here. Okay, this is not financial advice, but this is friendly advice. Whatever profits that you've made, try to secure a certain amount of it guaranteed. If you made $1,000 this week and you want to trade today, take aside $150 and say, this is all I'm willing to risk today. That's it. You don't want to put yourself in a situation where you're risking, and you blow back all the funds that you made that week. Oh, it's just another trade. I'm just going to give it a chance. Dude, look, fuck that. Everybody who's expecting to keep winning, that's not how you make money trading. You have to game the system. And the only way to game the system is don't allow the markets to take back the money that you've made. Do not allow yourself to give back the money that you've made. And so if you're profitable, make a clear distinction. Say, what am I willing to lose out of my profits? Now, if you're in a loss, let's say you're down 1,500 and your maximum loss is 2,000 for the week. You got to know that you're not trying to recover the 1,500 today. That's not how you should be thinking about it. If I can just make back the 1,500, everything is all right. The only thing you should be thinking of is that I only have $500 left to risk. That's it. If you respect these numbers like religion, if you really, really respect these numbers and you don't violate your risk parameters, you're going to game the system. You'll be able to walk away with profits and you'll be able to limit your losses on a consistent basis. You don't get to choose what the market does, ever. You can't make consistent money relying on the market being consistent. You can make consistent money relying on you being consistent. Put a 1 in the chat if that concept makes sense. One of the most important things I think I've ever explained on these calls. Guys, I'm being dead serious. If you think that the next technical strategy and you being just 2 pips more accurate than the next guy is going to make you rich, you're out of your fucking mind. I've coached thousands of traders single-handedly. And I've seen everybody let the arrogance get to their head and blow the money back. You are not as special as you think. Now, you are special. But when it comes to trading, everybody who thinks that they are the one who is going to violate all the rules and have it work out for them and not respect the financial management side of this always gets burnt. And I do not want that for you. The only traders that make it in this game long term are those that have a very clear understanding of risk management and risk strategies, and those who are disciplined enough to know that that is the priority, not outsmarting the market, not being the getting the best wick entry, not holding the trades longest, not flexing the highest R&R. That is not going to get you paid. It'll get you paid sometimes, but it won't get you paid consistently over time. So only one person on YouTube got it? That's ridiculous. How do you know the right time to scale up your lot size? You'll know when you're ready. If you don't know that you're ready and you're just like, I just don't know, then chances are you're not confident enough in your strategy yet to make that leap. At some point, you're going to see the strategy working so often that you'll know that it's time to size up. Now, write this down, just info. This is going to change your life. Risk sizing in trading is a function of capital, not a function of confidence. Let me say this again. Risk sizing in trading is a function of capital, not a function of confidence. Some people think that the better you get at your strategy, you're going to risk more. That's fucking stupid. If you have not realized that you do not control the markets and markets are unpredictable, then you just haven't been around long enough. For those of you guys that have been around long enough to understand and respect the, how do I say this, the unpredictable nature of trading, then you know the only thing that you can really control is going to be your entry, your risk, your risk strategy. So the most arrogant traders, which are the ones that predicate their success or their confidence on their experience, which is like, dude, I've seen this so many times. I've done this so many times. This has to work out. Those people always get crushed. They got to fall from grace. That's your job, is to find a strategy that can consistently yield you a percentage every month, and then to be able to get more capital so you can make the most amount of money using that system. So for me right now, I'm generating about 5% a month. So give or take, some months it's 2, some months it's 7, but let's just say on average 5% a month. Now, a lot of people think, okay, well, now it's time for me to get better at my strategy so I can make 10% a month. But if you think you're going to make 10% a month consistently, you're just out of your mind. You got to be paying attention here. The best hedge funds in the world are generating what? How long can you make 10% on an account consistently? How much do you have to risk to make 10% consistently? Probably more than you're comfortable with. So if you make 5% a month on a 100K account, that's $5,000 before the profit split. It's called about $3,800 after split. If you want to make more money, that's not enough. Some people will over leverage, some people will over trade, but what you, the now experienced trader, the person who now is competent, because you're listening to this audio, you're listening to my sort of experiential warning here, is the person who lasts in this game. Hold on. Oh no, we're still streaming. Shit, I thought we had stopped streaming. Find your technical strategy. The person that lasts is the person that scales their capital and just keeps the strategy the same. 5% on 200 grand is now $10,000. 5% on 400 grand is now $20,000. So some of you guys want to make 20 grand a month. Okay, at least you all should, and that's a good starting point. Not saying that you shouldn't aim higher, but good starting point for a lot of you, 20 grand a month. Now, on a 100K account, you're going to have to do 20% a month, and that's not realistic because you're going to have to risk the whole account and risk blowing the account every month to make that money. And so that's your whole goal, is like, if you haven't done step 1, which has gotten consistent enough with a strategy that you can make 5% a month consistently, then stop trying to scale up, stop trying to think about, growing the account, stop trying to think about getting rich. That's not how this shit works. You have not even become consistent with a strategy and you're already thinking about getting rich. Like, how the fuck does that make sense? Guys, we're on the same page, and gals, put a 1 in the chat if we're on the same page. You have to do things in the order that's required to be successful. If you want to be a professional fighter, you don't just walk in there and just randomly just put on the gloves and just everything's going to work out. If you haven't mastered how to slip a punch, if you haven't mastered how to do defense, you can't just walk in there. So the first thing is find a strategy. Second thing is experience enough with that strategy that you are confident, you are competent, you know exactly what you're looking for, you don't hesitate, and you're able to consistently produce the results. And at that point, go out there and get as much money as humanly possible. Go get as much funding as humanly possible so that you can scale your strategy up. All right? If you found that valuable on YouTube, just drop a like. If you did not find that valuable, clean your fucking ears and pay attention. All right? Because that was some sauce. That was real gems. All right, let's talk about those 5 biggest drags. Again, market still setting up. We have about 20 minutes until my session. So I'm looking at these 2 opportunities, which is buys at 1492 and sells at 14,300. Now I'm not going to take the shorts. Actually, I might take the shorts. We'll see. I'll see how this thing rejects. But we might be able to catch a short position here. Okay. Beautiful. Okay. So the buys are the ones that I'm favoring, but really this is just as simple as we got our high right here. We got our low right here. Price is in this beautiful range. Get rid of all the unnecessary. Why do I have so many random levels here? That was making me uncomfortable. Okay, I got all the necessary levels that I need. I got my lows and highs. I got my support resistance. Now we'll just wait for the market to hit either one of these zones. We can short it down or buy it back up. Personally, because of how low the market is, I want to be looking for the long position. So that's personally where my head's at. But you guys, obviously, you have your own strategies. You guys are seeing what you're seeing. And so I'm just going to explain what's happening in real time. Put a 1 in the chat if you guys are on YouTube and that made sense. But I feel like only 2 people commented. At this point, I might have just end the stream. I really ain't about to be out here giving away the secrets to the markets with, you know what I'm saying, for no reason. It's kind of ridiculous. Marco said I flipped 3,000 to 15,000, but that shit is hard and you need a little bit of luck. 5% monthly is what is realistic. Yeah, I mean, you don't really, I mean, you need luck, yes, but like you just have to realize, okay, that happened 3,000 to 15,000. Is that a one-off thing or is that something consistent? Like maybe it was skill, but is that something you can consistently do? Probably not, because you're going to have to risk back the money at some point. Having a proper risk strategy and a longer term, higher time frame, longer duration strategy is how you really succeed in this game. He said, no, this is powerful. Don't end the stream. Well, then let's get some feedback, people. I'm not a fucking circus monkey. If I'm giving you some sauce, if I'm asking you guys to verify that this information is valid, put a fucking number in the chat. This is not rocket surgery. All right. You guys thought this was one of these 15 pip traders streams talking about, oh, we're going to be analyzing the markets. People, the markets are going to throw you in the fucking laundry machine and toss you around. All right. I'm not going to babysit you because the markets are not going to be nice to any of y'all. I'm going to treat you guys exactly how the markets will, holding you to the highest standard possible. Why? Because you deserve that respect. You deserve the respect of being treated with a high standard, but it also means holding yourself to a high standard. Okay, perfectly clear. Once I realized this, it helped contain my greed, and those times came. Josh, they will come. Anyone that thinks that you're going to like reach the top of a mountain one day and that all trading is going to work out forever, you are out of your fucking mind. That's not how this trading shit works. You have to show up every day for the next 10 years. You got to show up and be the best version of you. Anybody that convinces you that you're just going to like sit back one day and everything's going to be smooth sailing, some weeks are like that. Some months are that easy, but that is not what trading is about. The people that made trading look like it was a game and it was easy and it was fun and this is all fun and games and you don't have to be like your best self. Those people were trading fucking demo accounts, the lot of them. All right, talking about, oh, it's money doesn't exist, it doesn't matter, just free yourself and all this other fucking bullshit. You're either making $100,000 a month from broker commissions or you're trading a demo marketing account. Trading is not for the faint of heart. You have to commit to personal development. And so traders is kind of like the Navy SEALs. So when I'm here in this group chat and I see a bunch of like fucking pussy whining, I'm like, you are not a Navy SEAL, brother. You are not a Navy SEAL. You do not have the mental fortitude or the maturity that it takes to succeed. And it's better for me to tell you than for the market to take all your fucking money. Wouldn't you agree? Come on now. Whoever started this whole thing, I blame IML. Everybody can be a trader. Everybody can do it. Anybody could, technically, but not everybody should. Fucking not for the faint of heart. All right, so 6 biggest drags on the economy. Make sure you guys note these down. I'll go through these one by one while this trade sets up. So let's explain where the world is right now. Going into this year, the markets were looking at what is now being referred to as the Goldilocks or a soft landing scenario. So in case you guys don't know, we printed a shit ton of money in 2020 as a result of the COVID pandemic. 30+% of all the money in all the US dollars in circulation, not the physical currency, but the debt that's on the bank's balance sheets, the credit that's been produced, that total caused an inflation crisis that we haven't seen since the 70s. So prices at the grocery stores went up. Everyone remembers that eggs were through the roof. Used car prices are skyrocketing. Groceries, energy bills, gas prices, everything was high. And so the Federal Reserve stepped in to stop an inflation crisis, and they started to take money out of the economy. So we were in this quantitative tightening phase for the last 2 years, trying to bring down the prices and trying to slow the economy down so that we don't have hyperinflation. As a result of that, because of the high interest rates, economic activity has started to slow down. But it has not slowed down to the point where we are in a recession. Typically, when the Fed does aggressive action, it crashes the economy. This time around, it's been different. The Fed wants to crash the economy. They've been trying for 12 months, but the economy is too resilient. And specifically, I'm referring to the US economy here, the real economy, not financial markets. So the real economy is measured by the GDP, which is the growth of the economy. So you're either expanding, you have economic growth, or you're contracting, you have economic decline. Right now, GDP is still running hot and the economy is still growing in size. The production is still producing. Now, on the other side, we look at employment. When everybody in a country has jobs, typically the economy is a lot more stable. You can buy groceries for your family. You're not in the streets protesting. You can afford to go to work and pay for gas and pay for the basics, and you're not losing money. You're not going to rebel. Now, what happens is when you're working a double shift and you're only buying the necessities for your house, and there's still not enough money left over because the prices are just that high. That's when people get very upset and we have problems. So what we're seeing now is the Fed was looking to crash the economy, and they were looking for a decline in GDP, which is the overall productivity of the economy. They were looking for some kind of hit to the employment numbers, which means a lot more people losing their jobs. And none of those came. The only thing that we've had is a slowdown in lending. And I'll explain some of those dynamics in a second. So going into this year, we were expecting 2 rate hikes, and now I think we're on our 7th or I think 5th or 6th rate hike. We're about to be on our 7th. I'm expecting 1 more at the end of this month. And so the Fed has basically done everything they can. They did higher for longer. They tried to scare the markets, and nothing has been able to slow down the ship. The US economy is very resilient. There's 2 ways that this ends. Number 1 is that we actually have a soft landing, which is, to be honest, still on the table. We can bring down prices without crashing the economy. Like we're there, 6 months more of this, we actually can get to that finish line. But what I'm starting to worry about, especially with the geopolitical events that are happening, is that who here is buying a house in the next year? Put a 1 if you're buying a house, put a 2 if you wouldn't buy a house with a 10-foot pole. Put a 1 in the chat if you were considering buying a house, and put a 2 if you would not buy a house for the next 2 years. And specifically, I'm talking to my US audience here. Said, man, I miss the EU buys. It's the worst feelings. All right, well, grow the fuck up. How about that? Like, I don't know what you want. You want me to cry for you or what? Brother, you're a trader. Write that shit down, take notes, and don't expect sympathy from anybody. I have to be part of ChartAddicts by hook or by crook. Well, if you try it by crook, you're gonna get fucking, you're gonna learn the hard way. So I'd rephrase that. I'd get your head right and then come back when you're ready. If it's cash, then I'll buy. Well, Gabe, prices are still high, aren't they? But Gabe says I'm not going to borrow money to buy it. Spot on. So at some point, prices will come down a bit. Cash buyers are going to have the advantage for sure. But right now, rates are high and prices still haven't come down yet. Because there's a lot of people, there's a lot of demand for new housing because of the amount of young people that, you know, really are looking to move from apartments to houses, etc. But everybody else agrees that nobody would be looking to borrow to buy a house right now. And so the biggest threat is that there's going to be a massive slowdown in commercial and residential lending. And that's going to lead to a lot of the slowdown. When banks, look, what happened in 2008 is when people foreclose on their mortgages and you own a bunch of houses and you got to give them back to the bank. I used to think that the bank doesn't actually mind holding these distressed assets. They're called bank distressed assets, BDAs. And if you guys ever want to make a lot of money, have cash, wait 7-8 years. Every 7-8 years, we have a recession, and then go to the banks and then go to their auctions or just speak to a mortgage lender and try to buy a bunch of their bank distressed properties at very low prices. I never understood why banks were so desperate to get these things off their balance sheet. And now I understand. There's two, what we call carrying costs to owning that investment. A carrying cost is just like the expense of doing business that just stays with you. One of them is going to be property tax, and the other one is going to be, damn, I even had this written down. Somebody help me out here. There's property tax, and then there's, insurance. So property insurance and property tax, both of those make it unattractive for banks to just hold on to these homes. They want them off their balance sheets. And so what I think is going to happen here is I do not expect a lot of foreclosures like we saw in 2008, because over 60% of residential mortgages are being held at rates under 4% and they're fixed. So what that means is if you bought a house 5 years ago, okay, you bought let's call it a $300,000 house, and your interest rate is 3.5% fixed, meaning that this number does not change. Even if the interest rates are going up and down and up and down, that 3.5% number does not change. And so why would you give this up? Let's say you're paying $2,700 a month for your mortgage. Why would you give up this $2,700 a month payment with this 3.5% interest rate to go to a new house? Let's say it's $400,000. And then now the interest rate is going to be about 8%. And you're going to be paying about $5,000 a month. Now you're paying double what you were paying before, but you're not getting a house that's double the price. All right, it's only $100,000 more. Like if you wanted to pay $5,000, you could get double the house, but you're not. And so because of the interest rates, your monthly payment has ballooned, and you can only afford a small house as opposed to the same house that you got before. And so over 60% of the market is holding their mortgages with these fixed rates. And these are the folks that are looking to just not do anything. I'm not going to sell my house. I'm not going to go buy a house. I'm going to sit my ass right here. That's where the banks start to see a problem. Banks make money off of lending and borrowing. And if they don't have anyone to lend to, if the commercial real estate market just got crushed, and if residential mortgages are all sort of in a stalemate, then banks are going to get hurt, and they need to make money somehow, which is going to be from Forex and other activities. So that's, I think, going to be one of the biggest drags. Second one, government shutdowns. Okay, we've seen a lot of back and forth between Republicans and Democrats in the country, kind of talking about funding and some of these like really stupid stalemates that they have. When it comes to the border, when it comes to Social Security, when it comes to medical insurance in this country, when it comes to social welfare, when it comes to national defense, these are the biggest topics that we need to wrestle with: food security and energy costs. But instead, these people are arguing about how much money to put in a bill, and how much of it should get appropriated to Taiwan, and how much of it should get reappropriated to Ukraine, and how much of it should go over to Israel. And that bifurcation that's happening is causing a lot of problems. There's a lot of costs that are ballooning in the government. And sometimes when you can't get shit done, you got to threaten a government shutdown like Trump did back in 2017. So I think a government shutdown going into this election year is going to be very, very risky, because any lack of productivity in the government is going to set us back. And that will happen. It's an election year, people. We're about to see the craziest news events come out. Prepare yourself. You're going to see aliens They're gonna release another Epstein list. There's gonna be world wars. There's gonna be trade wars. There's gonna be nuclear. It's an election year. Do not believe a fucking thing that you see on these news sites. The next 12 months are going to be the most horrendous and the most disrespectful coverage that we've ever seen in media. And if you're not prepared, you're going to fall for every fucking thing that comes your way. Straight up. All right. And so government shutdown big. Next one is going to be energy prices. This war in the Middle East is going to cut off supply chains. The biggest oil producing nations are now beefing with each other. You have Russia, Saudi Arabia, the United States, and then Iran and some of the other oil producing nations in the Middle East. You can say Iraq, Iran, and some of that pipeline route. Now, I don't know if you guys noticed, but every single one of the countries I just named is in war. It's minus Saudi Arabia, but Saudi Arabia is caught in the middle of a war. Because I don't know if you guys were paying attention to how this entire conflict started. There was the most historic peace deal that was ever going to get signed between Saudi Arabia and Israel. This was going to lead to peace between the Arab nations and real Arab neutrality and an economic relationship between the Arab states, which Saudi Arabia is sort of like the spokesperson for, and Israel, which seems to be the most problematic relationship that's been hard to really pin down, especially from an economic standpoint. Everyone just wants to get rich. Everyone wants to have a better quality of life. Everybody just wants to have a better standard of living. And that deal was right on the table. Now, because of this bifurcation, Saudi Arabia has to pick a side. And because of that, oil prices are about to get hit. A balloon in oil prices is going to do what to inflation here? Somebody give me the answer. Mo, give it a second. Let me see if anybody else can answer it, and then I'll let you hop in here. But what do you guys think that this oil war, this oil shock is going to do to gas prices? And what do you guys think that's going to do to inflation in America? Roy, this is fire. Perspective of the market sentiment. The Spanish community is missing out on this knowledge. David Sanchez, learn this and become very proficient so that you can then translate this to the Spanish community. Muhammad says, I don't live in USA, but I could buy a house anytime because always going up and rent becoming expensive. Well, Muhammad, this is why economists exist, because of comments like this. Okay. In the midst of a war, M says an increase in inflation. M, I don't know who you are, but thank you for restoring my confidence in the YouTube comments section. All right. Thank you. Gabe says going to ignite inflation again. Oh, good choice of words. What came in here with the fucking oil prices to the moon. Two-step, that's true. Yes. Josh says pump it up. And so if oil prices go up, there's going to be a big fucking problem that nobody's seeing. Guys, how does Russia fund their wars? How does Russia get their money? Is Russia broke right now, or are they rich? Because I'm going to tell you right now that that war between them and Ukraine made Russia very, very rich because oil prices ballooned during that season. And when your number one export to the whole world is oil and the price per barrel doubles, you just became twice as wealthy as a nation. While the people you're beefing with are buying your expensive oil. Oh, shit, we're funding the war, right? Now, same with Saudi Arabia. Who's going to be the winner? Saudi Arabia is the lowest cost producer of oil. They make oil at about $7 a barrel compared to $12 to $15 in Russia, compared to about $21 here in America. Okay? They make very cheap oil. Any rise in oil prices makes them that much richer. So long story short, an oil shock hurts the whole world except for these powers that are currently beefing. Iran gets rich, Russia gets rich, Saudi Arabia gets rich. Every country gets, these countries that are starting these wars all are going to come up off of this. Who gets hurt the most? Consumers who are relying on low gas prices to keep inflation numbers reasonable. Okay, price of eggs are a little bit more expensive. That's fine. I'm paying an extra $50 at the grocery store. That's fine. If I'm paying an extra $20, $30, $40 when I go fill up my car every freaking time, and that's going to cost me hundreds and hundreds of dollars a month, that's a significant drag on the average household. That is going to absolutely crush. If it costs you more money to go to work than you're going to make at work, yeah, people are going to be in the streets. This oil shock, I think, is one of the least talked about phenomenon that we should be expecting here. It said Trump 2024. I concur. All right, I concur. We're likely to see a lot of consolidation and then just one candle just completely shoot at some point. This is the Friday activity. It'll just trap to make sure that everybody is just guessing directions, buy, sell, buy, sell, buy, sell. And then it'll just completely stall until everybody is lulled to sleep. And then just one candle. And then as soon as everybody thinks that that's the direction of the day, it'll recover right back up. Thus is the nature of Friday trading. So if you guys think that you're about to outsmart the markets today, or if this is going to be like a Thursday trading session, welcome. Have a seat, right? Get your milk and cookies. Welcome to the fucking markets. And if you haven't done your due diligence by back testing how markets move on Fridays, maybe that you guys should take 5 minutes and do your homework before you start trading. A lot of people are like, oh, I'm going to trade Fridays the same way I trade Mondays. But tell me you haven't done 10 minutes of back testing without telling me you haven't done 10 minutes of back testing. Like, just tell me that you don't give a shit about your money and just, if you fail to back test, you fail to stress test these strategies and see how it impacts based on time, volume, based on the session, based on the day of the week, based on the market cycle. If you don't know how the market reacts in these different environments and you're just trading every day the same, you're basically telling me that you do not give a shit about your money and you prefer to treat this like a game. I'm just being 100% honest with you. Okay, so those things I just noted were the government shutdown and energy prices. The third one was labor strikes. I don't know if you guys saw, there was the labor strikes out west. Okay, Hollywood writers going on strike. I'll be honest, I do not give a fuck. All of them get fired, great, go get a real job. Now, the auto workers that are on strike, FedEx employees that are on strike, healthcare workers and nurses that are on strike, that is a significant threat. That's a significant risk. Pay the fucking nurses. Pay the nurses whatever the fuck they want. I'm being dead serious about this. America is getting to the point where we're going to be disrespecting the people that are holding this entire society together. The electricians, the delivery folks, the truck drivers, the medical professionals. These are the people that day in and day out are keeping the whole show running. They're keeping the music on. And we want to skimp out on them as corporate profits continue to balloon. Corporate earnings are doing great. Corporations are not hurting and they don't need to lay off people. So this is the cycle, is that inflation, okay, inflation gets worse, which leads to workers demanding higher pay. Because look, man, I'm working my ass off, but I can't afford groceries. And, you know, I can't feed my family. And so inflation leads to workers demanding more money. Workers demanding more money leads to wage inflation, which means that what people are getting paid on average is going up. Wage inflation leads to more inflation, because if you're getting paid more, you're going to pay more. And that's the cycle, is that the inflation that we caused by printing trillions of dollars led to a lot of stress on American consumers. The American consumers are not happy because they're working all the overtime shifts. They're working 60 hours a week and they still can't feed their family. And so they're demanding higher wages. The companies are paying them the higher wages because there's currently a shortage in labor. There's not enough people who need jobs. And because of the wage inflation, everybody has a job, people are getting paid more, and they're spending more at the stores, which is keeping prices high. Make sense? This is the death loop, the inflation death loop that we're in. And so when Jerome Powell said, in order to kill inflation, we have to get people to lose their jobs, he meant it. That's why I'm sure that we're still more than likely headed into a recession, even though that the soft landing is possible. The recession makes sense because Jerome Powell has one clear mission, which is when people lose their jobs, prices will finally come down. That's the trade-off. All those economic events make the average worker harder life, make me look at the other ways to make money than giving my time for a boss. I can barely afford anything. It's how I found Forex. Yeah, you got to do both. You got to have a job for some sense of stability, because Forex is not going to raise your children. You're not going to have dental insurance and medical insurance. Okay. But you do need a multiple streams of income in society today if you want to have a good quality of life. This is not an option. Pay the nurses 100%. How does the new House Speaker affect the markets? To be honest, I think it just gives the markets more confidence. The American system works when it works. When we don't have a Speaker of the House, when our presidents are being attacked by the judicial system, when we have this completely rogue use of the Justice Department and the judicial system, there's a lack of confidence. So at least now we have a face, and the guy's pretty well spoken. I like the guy. I mean, I don't like the guy. I don't fucking trust politicians as far as I can throw him, but he's saying all the right things. So let's see where this one goes. Anybody else long gold? Let's see. Gold is looking good, but I'm not convinced. I don't like this price action at all. We did have all the higher lows. It's checking all the boxes, but something about this is giving me a very, very bad feeling. Like push up, sort of double top, and then crash, sort of bad feeling. But I don't trade gold, so take that with a grain of salt. As of right now, we are still holding higher lows. We are still respecting structure, but we do have these lower highs here. So we're sort of in this wedge formation. And typically what happens in a wedge is you have a fake to one way and a crash the other way. And so if this thing crashes first, then we'll most likely push up. And if this thing goes up for the double top, we'll most likely fake down. This is what they won't teach you on baby pips. Just throwing that out there. Guys, would it be a YouTube stream if I didn't dig on baby pips at least once? Like, come on, just, I gotta at least give them shit. And once a stream. I'm not gonna make it a thing, but I'm gonna do one time per stream. Baby pips is not safe. They're catching strays. Okay, so much knowledge on this stream. Yeah, it is. Our essential workers and essential materials are being exploited. Yeah. Okay. Let's keep going with those factors. So I mentioned global slowdown, global slowdown, yes, because the whole world is going into war for sure, but we'll get to that one here in a second. There's the government shutdown risks going into the election year. Energy prices ballooning because of these wars. Labor strikes around the country. Number 4 is student loans. Student loan repayments are about to come back up. Now, even though it's going to provide some revenue for the government, it's going to put a strain on the economy, because if we're all paying money for student loans, we're not spending that through conspicuous consumption in the real economy. And so that money is just going to get sent straight to the government. They're going to fucking waste it, send it to Ukraine or some dumb shit. And yeah, it's going to put a giant drag on the economy, because young people already can't afford houses. Young people already can't afford to start a future, because the inflation that has happened for those like the barrier to entry to get a house now. 50 years ago, there's always that joke. Our parents bought houses for $20,000, right? They're like, oh, just go to college and get a house and all this shit. It's like, yeah, bro, if a house was $200 like it was back then, I'd fucking get a house. The shit's $500,000 with an 8.9% interest rate. And so our generation has already been screwed by the current circumstance and by the fact that the previous generation took the real estate market and then pulled the ladder up behind them so that we can't participate in that wealth creation vehicle. Crypto is our chance, right? Just as a side note, that's the great equalizer in my opinion, but we'll get to that later. So on top of all that, the fact that younger people are not able to participate in these wealth creation vehicles, now student loans resume. And a lot of that conspicuous consumption, that spending is about to dry up. Okay, that's going to be big. Let's talk about, okay, high interest rates, higher for longer. That's obviously going to be a major drag. Low liquidity in the markets, low demand for borrowing with commercial banks. Corporate lending is going to slow down. So when it comes to operational spending, when it comes to new hiring, when it comes to buying back their own stock, all these different operational activities that corporations do to keep their numbers high, they won't be able to do as easily. Home prices are going to go hopefully lower because the demand is going to slow down. And so these high rates, obviously a massive drag. And then last but not least is geopolitics. So I've already mentioned Russia. I've already mentioned the Israel-Palestine conflict. I've already mentioned the potential for China to enter. China and India are beefing head to head right now over trade routes and over resources. The world is in a very unstable place. Like, as much as we like to joke about Trump, when you really go back and look at things objectively, the geopolitical tensions that we had back then, even though, like, okay, trade war with China put a massive drag on our economy, it did lead to some supply chain shocks, which led to the initial inflation. But overall, it was beneficial for both parties to pay their fair share. Like, everybody in the world was now on the same page that we got to pay our fair share. What's happening right now is a complete disaster. on a geopolitical scale. I told you guys, Iran, Saudi Arabia, and Russia are about to get absolutely rich. And we're paying for it. Every time we go and pump gas at the gas station, we're paying for that war. Every time they sign another fucking an omnibus bill, a massive spending bill, we're paying for it. And we're getting absolutely nothing in return. So geopolitics, to me, I think is that big, unexpected monster in the room, Trump 2024. Roy, how was your Dubai trip? I'm hyped for the FX Summit. It was better than expected. Honestly, I'm so blown away by the venues up there. Like, fuck, I'm going to show you guys a sneak peek here just because I don't have to fucking blow y'all's mind. Okay, nobody has seen this yet. Nobody even has a slight inclination about where we're going to do the conference. I just want to show you guys a sneak peek. Put a 1 in the chat if you guys see this, and then I'm going to take this off the screen. I do not want to, I really don't want to put this out there, but I can't contain myself. I really cannot, fucking, you guys don't know what the type of life I'm living. All right. I'm a fucking nerd. I love financial markets. I want to help people. That's all I do. I trade. I help people. I'm a fucking savage. And my goal is to first change my life, change the lives of the people around me, and then change the world. I'm just a simple guy with a simple dream. The shit that the beauty of what we're able to accomplish by having everybody committed to the same goal. I'm lost for words, people. Okay, we're going to put out a promo video showing you a tour of these venues. It's going to be absolutely mind-blowing. And if you guys thought that Miami was insane, yeah. This is a whole city. This is a smart city. There's hotels, there's resorts, there are all the post-conference events, there's a stadium, everything that we need, indoor, outdoor, screens, waterfalls, and all the rest. You can't make this shit up. Actually, you can make it up. The people from the UAE did. Okay. Expo City, yes, it's sick. All right. And we had a bunch of different options. Like we toured the Coca-Cola. They give us by the way, shout out to the hospitality out there. They showed us a lot of love. I did get arrested with Raja. You know, Wicks don't lie. I got arrested in the mall with him. But besides that, very hospitable country. Very hospitable country. They gave us all the private tours. It was awesome. We went to the Coca-Cola arena, but this was more of like a stadium, sort of like Miami Heat arena kind of vibe. You guys can see it like this. The capacity was huge, but it's not as like a wow factor. This is 2026 or 2025. We're going to need a stadium for sure. But you guys can see that Expo City is not even close. Come on, baby. Come on, bro. Look at this shit. Look at this shit. We also went to Festival Arena. I went out there to the Blockchain Life conference. Shout out to the organizers of the Blockchain Life. Thank you guys for an amazing tour. Thank you for all the hospitality out there. Great meeting all the organizers there. Festival City, went out there, Blockchain Life. My only issue with Blockchain City, it's beautiful. It has a mall attached to it. Everything is gorgeous. They have a nice indoor venue, but it just took so long to get in. It was underdeveloped. It took me about 10 minutes, 15 minutes just to even find my way in there. And so it wasn't, not my cup of tea. Folks, we're about 30 minutes into my micro session, and I'm starting to realize that today, very low volume. We are likely to get one candle, like I said, like one big candle that comes in, but I'm not expecting a lot of volume the same way that we had yesterday. So more than likely, I will not be taking a trade today. Hopefully, you guys still took something away between those major economic factors that no one's talking about. Government shutdowns, energy prices, labor strikes in the United States, I don't know what the word is, resuming student loan payments, higher for longer interest rates, and the drag that's going to have on the economy and on overall liquidity. And then geopolitics and the risk that's going to have on the rest of supply chains, as well as inflation, and as well as just risks, just war risks. All right. Thanks, Roy, for doing it in the Middle East, for sure. I mean, the Arabian Gulf isn't necessarily the Middle East, but it's close enough. I'm Lebanese, but I'm going to tell you right now, I would not host this conference in Lebanon. I love my country to death. I wouldn't host it in the Mideast, but I would definitely host it in the Arabian Gulf. Why? Because they understand the value of tourism. and they got lucky enough to have oil under their shit, so they built up a great country. But they understand service, they understand tourism. Guys, you won't hold a door for yourself out there. I wasn't able to pick up a glass of water for myself. Someone would come running from another room and pick it up for me. All right, this is real shit. The service out there is unbelievable. I came back to Miami. I waited 30 minutes at my table. They were like, fuck you. I was like, can I get some water, please? Please? They were like, no, shut up. I went back to Dubai. They're like, sir, could I please open the door for you? Could I iron your shirt while you sit at this table? Could I fucking get the palm and just and fan you off while you just sit here and eat these foreign grapes? Oh yeah, by the way, all the food is better than better. All the food is clean and it's taken care of. There's no hormones and all this stuff. Do you mind, sir? Oh, fucking take me back to Dubai. I walked into the store today. They were like, yo, hey, put that shit back down. I'm like, yo, hey, man, I love Miami and everything, but where's the service? I can't go to Dubai by myself because I'm not trying to go to jail too. Amber, what does that even mean? What do you mean you can't go to Dubai by yourself? Sounds a little shady. What are you getting into in Dubai? I got arrested for a whole different thing. Me and Wix don't lie. Raja, that's a story. I don't even know if I should say it because I feel like we're gonna get in trouble. They took our passports, they took a picture of my face, they fucking got all of our socials. They might be watching me right now. Right? And I don't care. I left the country, whatnot, but I want to be respectful of their country. I want to be respectful of their rules and customs. But I'll tell y'all right now, people do not fucking play. He said, Emirates hospitality is next level. I love it, bro. I love it. I'm gonna change my name to Roy bin Zayed at some point, bro. I love that country, bro. Oh, US 30 is melting. So industrials are taking a hit. NASDAQ has not crashed yet, but there is a potential sell here on NAS. So close to entry. I'm pretty sure I had to have drawn my fib incorrectly here. No, I didn't. So then what happened? I drew it on the wrong time frame. I just hopped up to the 1 hour real quick. I'm drawing it from the body of yesterday's yesterday's New York session high all the way to the bottom. And that was a perfect 886 rejection. I don't know how I had it so off. 288. It wasn't 290. It was 288. I'm sorry, y'all. I was 2 points off. Look at that shit. All right, well, this is also the risk of being too accurate. You don't want to be too accurate when it comes to trading because brokers don't respect these zones. The market will get very close and just turn around. You don't want to be like, I ain't trying to be perfect. I'm trying to make money and get a good R&R. So it's things like this. We're trying to squeeze out the last few points of an entry. Will have you missing a trade. You US guys are blessed. UK mortgage rates are only fixed for between 2 to 5 years. Brother, move out of England. That's what I would tell you. I'm not saying that you're in England if you're in the UK in general, but vote those fucking socialists out of power and change your countries or flee, because there's only one way that game ends. You have to project the end result out. You have to look at this in 5 years, 10 years, 15 years, how it's going to be. And there is no hope for the UK, in my opinion. And I really don't mean to be stark about this, but I mean this from the bottom of my heart, that there needs to be a serious policy change in both Canada and Europe, because the socialist policies combined with rampant immigration, combined with lack of economic growth, combined with criminally high tax rates, means that there is going to be no hope to grow out of the problems and the debt that has been produced. Okay, so Roy Habibti. Bro, first off, don't ever call me Habibti again. Say, fucking, that's strike one. He said, with GDP numbers coming in green, do you think that the terminal interest rate will increase a prolonged higher interest rate environment? Well, I've kind of been saying that for the past hour and a half, Em. Don't be disrespectful about this, but I've literally been saying the higher for longer rates are going to create a drag on the economy. I am expecting one more rate hike. There's a Fed meeting in 3 days. So I'm expecting one more rate hike to end the year, but at a minimum, we're going to have higher for longer. That is to be expected at this point. Okay. So we have this fib, which is accurate. So pretty simple. I'll reverse that. 1490 on the dot. Let's make money. 1494 is the buy entry I'm watching. I want to see a breakout of this range. This is probably not going to happen till like 11:30, which is in about 45 minutes. I've basically told you guys everything I needed to say about geopolitical events, all the pricings for the trades that I'm looking at. He said, Habibti is woman. Say Habibi. Muhammad Ahmad, thank you for the correction. He says, Roy Tank. Yeah, boy. Yes, sir. People know. This is like the first time people saw a picture of me on Twitter and they lost their mind. I wish you guys could see this comments. Every prop firm owner is saying I look like Dan Bilzerian, saying I look like the Hulk. Don't get me wrong. I appreciate the compliments, right? Thank God I have my ego in check, right? People were hyping my head on Twitter, making it seem like I was the next Arnold Schwarzenegger. I'll take it. I'll marry a Kennedy. I'll take one for the team, right? But you guys were really sizing me up on Twitter. I appreciate that, showing some love. Some dude said my arms were bigger than my head. Somebody said I'm in the wrong profession. I should have been a bouncer, right? I fuck with it. I'll take the compliments. So yeah, we got an Arabic learning lesson in the chats right now. That's what I'm talking about. We're getting multilingual right now. We're getting intercontinental. We're getting cross-continental right now. We're catching cross-continental pips right now. Also, I really genuinely feel bad for all of the JPY traders. Everybody who's trading UJ, CJ, I am so sorry. Like, this has got to be tough for y'all. I'm so glad I'm staying away from UJ right now. Folks will be buying, folks will be selling, and there just does not seem to be a clear direction. Look at these wicks. This is the thank you for playing. Give me back the money that you just took from the markets. 3,000. Central bank operations. That's just so dirty. Okay, let's take a look at the DXY. DXY, have we hit the final price? So guys, when the magnet is up, the magnet is up. There's nothing that I can do. 107.5, I don't make the rules. 107.5 still has not gotten hit. First, the magnet was at 103.7. We hit and then we smashed. Then the magnet moved to 105.6. We hit and then we smashed. Now the magnet is sitting at 107.5. The magnet is going to hit and then it's going to smash. Okay. Everybody was like, well, Roy, why are you bullish on the dollar? Let's take a look at the world right now. I'm going to draw you a picture since you guys won't seem to understand this. I'm going to draw a picture. This is the flat earth. Okay. This is the flat earth. I'm not a flat earther for the sake of this. A two-dimensional picture of the earth. Okay. Be like, oh, ChartAddicts is a flat earther. So have you ever been to space? Have you ever seen it? Okay, so that's Africa, that's Europe. Okay, we got all of Asia doing its thing. We got the Gulf states and whatnot. Okay, boom. Then we have Antarctica, wink, wink. Then we have the South Pole, wink, wink. All right. And then we'll do the edge of China right here, just for the sake of it. So here's the US. Here's Canada. Okay, Mexico. We got South America right here. I know, guys. Brazil. Guys, relax. Like, oh, bro, not all of South America. Bro, okay, look. We got the EU right here. And then I'm actually going to make a distinction and put the UK out here. Because since they separated from EU, because of Brexit, they have their own monetary policy and their currency is likely to is not going to be correlated with the European currency. And so Euro versus GBP wars still ongoing. Okay, then you have the African states, because they now have like this kind of African union between, right now it's a political union that they're trying to form, and they're trying to make it economic. Now, these people ain't watching this stream. I really hope that they are, but they're not watching the stream. But if they are, don't fucking do it. Do not create a coalition between the 7 largest nations in Africa to try to create your own currency. Europe tried that. What happens is the 3 richest states pay for everybody else, and then they just basically bear the brunt of all that responsibility, and it doesn't solve any of the problems, and it basically makes all these smaller countries slaves to the whims of the 3 or 4 largest producing nations. In the European Union, it was Germany, England, Italy, and France. Everybody else was just kind of subject to whatever they wanted, which is why the Great Britain left. They were like, look, I don't give a fuck what Germany wants. We do not have the same interests. And so Africa might be doing the same, whatever. And then we have the Asian. So we'll split that up between China and basically everybody else. If you're going to park your money somewhere today, where would you do it? In Europe, right here, there's a war between Russia and Ukraine. Right here, right in the middle. China is doing operations in the South China Sea. North Korea is launching rockets in the South China Sea and in the Sea of Japan. Okay, so there's war happening over here and the potential for a takeover of Taiwan. There is a geopolitical conflict here between Russia and Ukraine, which could send the entire EU to war with Russia. You have the African states, where I would separate it between the North African countries, which are now sort of more leaning towards the Arab kind of nationality, kind of like they're more involved in the Arab politics than they are in the African politics. But then you have some of those developed states that are really popping off. You have Nigeria, you have Ghana, you have Ethiopia, and you have South Africa that are coming up. So there's a lot of places in the world, and there's Brazil, there's Venezuela here, and there's a lot of places in the world to put your money. So you have war, bifurcation, no central unity, and the banking system is still not as developed as you'd really like it to be to park billions and billions there. Socialist hellscape, that's Canada. Mexico, not very well developed, but honestly doing better than Canada is right now. I'll just be completely honest. I was like, oh, but what about the cartels? What about drug trafficking? There's a lot of that problem as well. But at least from a productivity perspective, Mexico's holding their own. Okay. And then South America, this is not where you want to put your money, especially with what happened in Venezuela recently and some of the other political issues happening in some of the South American states. So you're like, okay, I'm a billionaire right here in Europe. Where am I going to put my money? The only place left is the US. The US has 2 natural geographic borders, which is the Atlantic and the Pacific, 2 friendly neighbors. We got Canada up here, a bunch of puss. And then we have Mexico down here. So friendly neighbors, 2 beautiful geographic borders that separate us from enemies. So we have physical security, and then we have military security. 70% of all global transactions are settled in US dollars. Our stock markets are robust. Our consumers are the strongest in the world. The US consumer is the strongest economic force in the world. The petrodollar system means that all oil needs to be settled in US dollars and priced in US dollars. And so the petrodollar system, which the whole world runs on oil, is ran and operated by the US. So you have the global reserve currency, you have all global settlement. Most of the debt, the foreign debt that's held, is in US dollars, dollar-denominated debt. The only place the money's going to end up is the US. That is my argument for the bullish dollar. Y'all get me? What supplements do you take, Mr. Tank? All right, bro. That's fucked up. Put a 1 in the chat if you guys learned something from that example, and if you guys kind of have a better understanding of how the global landscape looks. This is obviously kind of like a surface level explanation, but we're not going to dive way too deep into the minutia here, just for the sake of this stream. Oh, surprise, surprise! We're still consolidating. All right, so I'm going to hop off the stream here pretty soon. So let me give you guys my 2 scenarios. Number 1, we're going to get a break back above probably around 14,300, 14 to 320. And then we'll end up crashing back down. This is where a lot of the best entries will be. Okay, so you're going to see wick, draw a box, wait for it to hit the top of that zone again. So as soon as it hits that zone again, you can short it. Very straightforward. The next is going to be the long positions, which is it's going to come down here. It won't hit our entry yet. 1490 is the entry. It won't hit the entry. It'll come back up like this. And then start to recover. And then eventually come back down to the 88.6. Okay, so this whole like, oh, I missed my entry. Let me just chase it. NAS Bootcamp folks and CA members, you guys know why we don't chase trades. Okay, so 14,320 and 1490, mark those off. Great trades for the day. Do not overstay your welcome and make sure that you guys have a risk strategy that allows you to walk away with profits no matter what. Deal? Put a 1 in the chat if you guys learned something, and leave a like on YouTube if you learned a thing or two. Can someone be a man and be from Canada? No, that doesn't go together. You can, but you can't be a man and remain in Canada. Okay, because where you're born and where you come from is not up to you. How you're born and the circumstances you're born with are not up to you. What you do with those circumstances and the decisions you make to build a better life for yourself, that is on you. If you choose to stay in a country that you know is counterproductive to your family's future, fuck what you want. Fuck your friends. Fuck the life that you thought that you were building or whatever. If you're not willing to leave for a better opportunity for your family, then no, you are not a man. My family brought me here from Lebanon for better opportunity. They made the ultimate sacrifice. They had a job over there. They had a family. They had all the security that they could have ever wanted. Help raising the kids, grandmother, everybody was there. Leaving all of that to go to a country you don't speak the language of for better opportunity, that is what a real man does. You got anything on gold? Yeah, hold these. No, my bad. Sorry. I forgot. Turning over a new leaf. I'm trying my best. Sorry, guys. It's baby steps. Not perfect. Baby steps. Yeah, I told you guys this is giving me the heebie-jeebs. This is giving me the heebie-jeebs. I see this joint melting, but it's the same exact thing as I said earlier. You have a wedge formation here. And so typically the way that wedges work is whichever way you have the break first, typically the market will go the opposite direction. And so if we have this massive crash down, I'd be looking to pick it up around the 68 to 70 region, this 20-point range right here. I'm from Canada and I'm trying to leave. Romy and Max, bro, you guys know that I have all the love and respect for y'all, fam. So I am not throwing y'all. There are exceptions to every rule, and you guys are it. So don't let this don't let my Canada comments come at you. And it's not like you guys, it's not like you're the fucking prime minister, Roman. I'm shitting on your country. It's not, I'm not fucking coming at you. He said Max is over here punching the air. Yo, son. Gabe says, Max, you can stay in my crib. Yeah, hell yeah, son. You guys got to get out the cold for about a week. Maybe that's why Trudeau is such a dumbass. He's just out there. No, actually, there's something wrong with that dude. For real. Wasn't he an actor, bro? Wasn't he a fucking actor? This is what happens when your father is very successful. All of you who are listening to this, who are going to be very successful, your kid is going to be milking your last name, right? You better make sure you raise that motherfucker right, or he's going to fucking ruin your last name and drag it into the mud with him. Trudeau's father was a respected politician in the country. He was very, very well known. Trudeau was like an actor out here doing blackface, all this other dumb shit. Dude said, yeah, I'll run the country. I'll run the country. And y'all dumbasses voted him in. What? What? How? But then again, we voted in Biden. So like, I don't, hey, I'm throwing bricks in a very, very, very glass house. Okay. But we're going to get Trump back next year and basically put the foot back down globally and restore some kind of global order. Thank you for the stream. I appreciate the shared knowledge. Bupaun, it's my pleasure. Muhammad Ahmad, thank you for everything. And thank you for the correction and the Arabic lesson in the chats. Whoa. And what if someone changes the whole environment instead of running away and still be successful? I love it, but you have to, a tree cannot grow in an environment where there's no life. If the ground is not fertile enough for the seeds to plant and to really bear fruit, then no matter how strong-willed that plant is, it's not going to be the healthiest plant that it can be. So if you want to be successful, the ultimate success story is to leave your homeland and to go to a land of opportunity, and then to become successful in this land of opportunity so you can go back and help your people in your homeland. That is the hero's journey. Some people have that in them. Some people have no interest in doing all that. That's fine. God put me on the earth to do that. I will go back for my people. But there's no way I'm becoming a billionaire in Lebanon unless I am willing to involve myself in unbelievable amounts of corruption, right? Would I have the luxury to be in school and learn how to trade and fail and lose money and become a shoe reseller and put that money into trading and invest in crypto? Would I have that same luxury in Lebanon? Maybe, but maybe the financial circumstance there would not have allowed me the luxury of trying these different things or getting exposed to these different avenues, right? Now, knowing myself, how to find a way to do it regardless. That's in me. But yeah, you have to be realistic about the environment that you're in. If America continues to print this money, if we don't have Trump come back, if we don't balance the budget, the tax rate in America is going to become unbearable for the wealthy. And so I'm out here working my fucking ass off. I don't go to parties. I don't go hang out. I'm skipping birthday events. I'm skipping family events. I'm doing everything I can to focus and to really build value and to really be the best version of myself for the community and really provide as much service as I can to the world. And then in 10 years, they're going to raise my tax rates to 60 to 70% like Canada. And so all the hard work, every dime that I make above a certain dollar gets completely taken and just taken by the government. That environment will no longer be productive for me to stay in. I was just talking to some folks that moved to Dubai or moved to Puerto Rico for the tax haven purposes. This is what America is doing, is they are incentivizing people to leave. And so if they incentivize me to leave, I will leave. I am a rational economic actor. I am not a sentimental person. I've taken sentimentality out of my playbook a long time ago because I realized it's selfish. Why would I stay here when I know that for the sake of my family, which is really my number one priority, there'd be other countries where I can make way better decisions for them. They can have better healthcare. They can have better opportunity. They can be taken care of for the future. The corruption is going to be a lot more manageable. Now, for right now, America is the greatest country in the world, on earth. This great experiment, if successful, will be the most incredible. You don't see people climbing over the fence to sneak into China or India. I'll tell you guys this right now. People are coming here. And so for now, this is what I believe. You have to be in an environment that's successful and that allows you to play the game to the best of your ability, that has a tax system and that has a financial structure that's advantageous for you. But if you have that sentimentality and you have that love for your homeland, don't lose track of the vision. Go back and save your people. It's that simple. Bless my man, Roy. You're him. No, I am not him. Jesus is him. Jesus is king. That's what I know. The shoe reseller thing is apparently used by a lot of traders. Must be a Florida thing. Well, I just moved to Florida this year to host the #1 financial conference in the world, the FX Summit. I grew up in Virginia my whole life, and it's not a Florida thing. It's just when you are trying to make money no matter what, and you have a job. Some of you guys literally just complain in my DMs all day. Like, I don't have money for a challenge. I don't have money for this. I'm going to wait another 6 months and hopefully I get ahead of my bills. Newsflash, if you're behind right now, you ain't getting ahead at your job. Like, wake the fuck up. If you're in debt and you know what you're going to get paid the next 2 weeks, the 2 weeks after that, the 2 weeks after that, the 2 weeks after that, and you add up all those numbers and you do the math on the back of the napkin and realize you're not fucking getting ahead. You got to find some way to make money. And trading is not a get rich quick scheme. Reselling a product is. If you buy some shit for a cheap price and you resell it somewhere else for $200 on the spot and you have enough money for a challenge, that is quick money. Trading is not that. And so it's more of like a hustler mentality. The people that are willing to do whatever it takes for their success and for their future and to fund those accounts and to blow an account and to go back and sell your favorite shoe that you thought you would hold for years as an investment and fund that into an account and blow it and promise yourself you would never blow it again. That is the mindset of a true hustler. The person that's like, well, I don't get paid enough at my job and I just can't afford a challenge right now. And I'm just going to keep demo trading forever. And I'm just going to, yeah, that's a mindset thing. All right. So do whatever the fuck it takes. Get your ass on Craigslist, get your ass on Uber Eats, make that side money and invest in your accounts and really, really take this to the next level. What you'll do is you'll treat the account with respect because you just traded in real effort in exchange for that account. You're not going to treat it like a demo account. You're going to treat it with the same level of intentionality that you would if it was live capital. And maybe it is live capital. But that little $200 is not going to fucking do anything in a brokerage account. I would highly recommend leveraging it using prop firms. But that's obviously not financial advice. Do your own research. Okay, ladies, gents, doesn't really look like we're getting much action here today. I can't say I'm surprised. I told you guys it's a Friday. I told you guys typically this is how we're going to be. This is what we're seeing. I gave you guys both levels. Happy and safe trading. Please drop a like on your way out the door. If this is your first stream, welcome. If this is not your first stream, welcome back. I'm your host, Roy Dunya, the co-founder of ChartAddicts. We're hosting a NASDAQ bootcamp. If you guys want to learn my strategy specifically, know when to get in, when to get out, the best times to trade NASDAQ, a day trading strategy that works and has worked for the hundreds and hundreds of streams that I've conducted, then I highly recommend you guys head over to our website at chartaddictsfx.com. Click on live classes and you'll be able to see the registration there. There's about 7 days left. I want to see as many people on that webinar as possible. Go to live classes, sign up for your seat. I want to see you guys there and I guarantee it'll be about as valuable as you could imagine. Happy and safe trading. Take it easy. Peace. Okay, live stream is over. Yeah, ladies, gents,